Hello, the company being analyzed today is KP Energy Limited. This is a company engaged in the manufacturing of wind farms. So that's what the company does. Today, we're going to analyze the company's financials, what the company actually does, its cash flows, its balance sheet, and finally, what's in store for the company. What are the future outlooks for the company? So let's start. First, we have the market cap. The company is currently worth around 2,754 crore rupees, so not the biggest of all companies. The current price of one share is 412 rupees. The book value, that is assets minus liabilities, 41 shares, really high return on equity, 45.4%. Return on capital employed, again, really high, 41.7%. And the stock price to earnings ratio of 22.5. Okay, really nice return on capital employed and return equity numbers. Let's take a look at the profit and loss all the way from 2014 to 2025. First number is sales, then this black one is operating profit, then we have operating profit margin. Now here you can just see operating profit margin, double digits operating profit margin. So that's pretty good. So we go all the way to 2025. What do we see? We see 936 crores of revenue. We see 176 crores of operating profit, giving us an operating profit margin of 19%. Then this 154 crores, this is profit before tax, finally giving us a profit after tax of 115 crores. Okay, so double digit profit margin company crossed the 100 crore net profit mark and has almost reached 1,000 crores in sales. Very, very nice. Now, in percentage numbers, these growth rates are extremely impressive. The compounded sales growth for the past 10 years for the company has been 43%. Compounded sales growth. Last 5 years has been 66%. Last 3 years has been 55%. Phenomenal sales growth, extremely impressive sales growth. Then, compounded profit growth, 44% over the last 10 years. Last 5 years, 153% compounded profit growth. Not even annualized, but compounded profit growth. Last 3 years, 88% compounded profit growth. TTM or trailing 12 months, last 12 months, 102%. Extremely impressive profit growth. Then, return on equity rising. 10 years ago, really high, 34%. Then 5 years ago, 36%. 3 years ago, 42%. And last year, 45% return on equity. Really, really nice, rising figure, extremely high. Then cash flows, cash flows, cash flows. Take a look, pay attention to the cash from operating activity, this figure. So the company is cash flow positive. The cash flow from operating activities, it is actually positive and it's very volatile. Okay. So the last few years have been very, very healthy for the company in terms of cash flow. As you can see, in 2025, it generated 162 crores of cash flow. In 2023, generated 28 crores of cash flow. 2022, 26 crores of cash flow. Before that, it's a bit fluctuating. It goes up, it goes down. But in recent years, things seems to have taken a slight change. Now, we look at the financials and at the sum as a summary, extremely high sales growth, extremely high profit growth, positive cash flows. Cash flows in recent years have risen very well, very fast, and return on equity has continued to rise. Same, I assume, with return on capital employed. Let's take a look at what the company actually is doing. So this is the company's annual report. Okay, annual report. Here we have the company overview. Okay, let's read. KP Energy Limited is a prominent leader in the Indian wind energy sector, distinguished by its advanced and comprehensive balance of plant solutions that drive the sustainable development of large utility scale wind farms. So, it manufactures wind farms. If you're wondering what balance of plant means, it is the supporting infrastructure for the wind farm to function. So wind farm has to function. There will be some auxiliary or supporting infrastructure, supporting tech supporting equipment that is there. So it will do that. Now, till now, the company has installed a cumulative capacity of 1 gigawatt. So, in its entire history, cumulative, it has installed 1 gigawatt. And currently, as of now, it has an additional pipeline, 2.26 gigawatt. So, in its entire history, the company has installed capacity up to 1 gigawatt. And this year, or in the next year and a half, it's going to install 2.26 gigawatt. So more than double of what is installed in its entire history is going to install in the coming 2 years. So massive, massive. N- Business models. Here we have three business models. Okay. One, we have EPCC. Okay. Engineering, procurement, construction, and commissioning. Basically, here a client wants a wind farm. A client wants to have a wind farm. So what does the company do? KP Energy, it engineers that. It designs the wind farm. It procures the material for the wind farm. It constructs the wind farm and commissioning, making sure that the wind farm actually is working. Okay. Here it says this segment encompasses the end-to-end development of wind farms and wind solar hybrid farms. It's not even wind, not just wind, wind solar hybrid farms. This includes the site identification. So where is this place going to take place? Where is this wind farm going to be constructed? The construction and project commissioning. So it involves all of that. This contributes to 96.9% of this company's revenue. So majority of the company's revenue comes from this. Okay. And 1 gigawatt plus cumulative capacity has been energized slash installed in EPC projects. So the company manufactures wind farms and then gives it to the client. Then second, we have annuity based operations and maintenance. So, okay, operations and maintenance of the wind farms that it has made for the clients makes sense. This is annuity, so annual payments being made. 2.5% of revenue comes from this, and 546 megawatts of wind farms currently are coming under operation and maintenance, or have come under operation and maintenance. So, 546 megawatts worth of capacity has been operated and maintained by the company. Okay, then this is very important. This is very, very important. Annuity based revenue, independent power producers. So let's just read this, okay? As an IPP or an independent power producer, KP Energy develops, owns, and operates wind and solar assets, directly contributing to India's renewable energy capacity. So this is different from EPC. Under EPC, this wind farm was given to the client, but under IPP, the wind farm and solar farm are owned by KP Energy itself, and it sells the power made to clients. Now it only contributes 0.5% of revenue, okay, 48.5 megawatts of electricity, but this contributes substantially to the EBITDA. This is the most profitable segment, and I'm not sure if this is correct, but an extremely high portion of the company's profits comes from this very small source, IPP. So this is the high margin segment, the profitable segment, the profit driving segment, and the EPCC is the revenue driving segment. Of course, this is profitable. EPCC is profitable, but it's very low margin. So IPP is the more capital intensive. IPP is more capital intensive and more and very much more profitable. It contributes, I think, more than 50%, if I'm sure, 50%, more than 50% of EBITDA comes from IPP, or way more, or EBITDA, a lot of EBITDA comes from IPP. Okay, moving on. Where were we? Yes, key financial ratios. Okay, key financial ratios. So we have discussed revenue segments. Where does the revenue come from? Okay, here we have key financial segments. Let's cover the interest coverage ratio. Interest coverage ratio, operating profit divided by the interest the company has to pay for loans, has to pay on loans. So it is 8.8 in fiscal year 2025, a slight decrease from 9.15 last year or fiscal 2024, and 8.8 is really, really healthy. Then the company's debt to equity ratio has risen from zero point 0.5 to 0.74. So it's taking on more and more debt. Interesting. It's taking on more and more debt. The interest coverage ratio, we covered that. The current ratio of 1.37. So current assets are 1.3 times current liabilities. Operating profit margin 18.8%, slight increase. Net profit margin 12.1%, and a really high again return on equity. Yes, return on equity. Now, let's take a look at the future outlook for the company. Okay, future outlook for the company. Hold up. Let's take a hold up. Um, we have a lot of things we can actually read here for the future outlook of the company. Hmm. Okay. Fine. So KP Energy is actively exploring strategic initiatives, including development of 1 to 2 gigawatts of offshore wind projects in Gujarat and Tamil Nadu. This is something new. Offshore wind projects are coming up in Gujarat and Tamil Nadu, and the company has distinguished itself as the first to advance wind resource deployments in South Gujarat. So it is the first to advance wind resource development in South Gujarat. These efforts, alongside the ambitious renewable energy targets set by the Government of India, aiming for 500 gigawatts of installed renewable energy capacity, including 140 gigawatts of wind power by 2030, further strengthen the company's growth prospect. So the Government of India's target of 140 gigawatts of wind energy, of wind power by 2030, it seems to be a big thing for the company's growth. So government schemes are very important. Then remember IPP. IPP is so important for the company's profits. So the future projections for IPP. Building on the current capacity of 48.5 megawatts, the company has set an ambitious target to expand its IPP capacity to 100 megawatts by the end of fiscal year 2027. So we are currently in fiscal year 2026. So by next fiscal year, by the end of next fiscal year, 2027's fiscal year, 100 megawatts is what they're looking at. Then let's go all up, okay? Even more pages up. Hold on, why is this so awful? Yes, offshore wind projects. Seems to be a big thing for its growth. So India is making significant strides in offshore winds. First offshore wind seabed tender has been finalized with a revised strategy paper outlining three models of what 37 gigawatts of capacity by 2030. Hold up. So offshore wind, this big new thing that's come up recently in last few years, offshore wind tenders have been finalized with a revised strategy paper outlining three models wanting 37 gigawatts of capacity by 2030. 37 is massive. Okay. The SECI announced 4 gigawatt offshore wind seabed leasing in Tamil Nadu, and a viability gap funding. This is a scheme by the government, has been approved for an initial 1 gigawatt offshore wind to 2032. So the company till now has only installed 1 gigawatt KP Energy, and this offshore wind can have a capacity of 37 gigawatts. So this can be a massive opportunity for the company. See, it can be a really, really massive opportunity for the company. Then what else? What else can we read here? I think that's it. We have nothing else to read. Okay, let's shift it. Okay, so this is the investor presentation of the company. Here we can find some more important stuff to be said. Now, as you can said, the company has installed up to date 1.05 gigawatts. Currently, it's working on 2.22 gigawatts worth of it. Okay, this 10 gigawatt ambitious group target, it's not for KP Energy, it's for the whole KP group. So there are other companies coming under this KP group, not just KP Energy. Okay. What else? These are the clients. These are the places, the client coverage. These four states, UP, Gujarat, Maharashtra, and Karnataka. So these are the four states being covered. Then is offshore wind capacity. See, offshore wind. This is a future area of growth where we're talking about Tamil Nadu and Gujarat. So these are the two locations where they're looking at for future areas of growth. Okay. This VGF, this fund, this is a government scheme. For 1 gigawatt, it has allowed for 7,453 crores. I guess that is the project size. And there's a 70 gigawatt offshore wind energy potential in India. 70 gigawatts. So massive potential for growth for this company. Okay. Then the higher PLF. Now, what is a PLF? A PLF is a plant load factor. It essentially measures what capacity of an electricity generating plant is actually being used. So let's say it's 40%. 40% of the total capacity of the power generating or the electricity generating plant is actually being utilized. So it seems that for onshore wind farms, the current the PLF, the plant load factor, is 30 to 35%. So only 30 to 35% can actually be utilized. Total capacity can actually be utilized. But for offshore winds, it seems like 40, 45 to 50% of plant load factor can actually be utilized. So more utilization is there and massive growth opportunity up to, as we saw earlier, there was something mentioned about 35 gigawatts. There were three paper models for 35 gigawatts. India has a potential of 70 gigawatts. For 1 gigawatt, the government scheme has allotted 7,400 crores. So massive opportunity for the company, which brings us to the final point. Where is the final point? Hold up. Yes, this. The management of the company has said that the company is looking for 60 to 70% growth year on year basis. So this is the growth the company is looking at, or it's looking for 60 to 70% growth year on year basis. So I guess that is it. This was a pretty small video, to be honest. Um, we can read this, by the way, installed capacity, where it has been installed in terms of gigawatts. So more than 12 gigawatts has been installed in Gujarat, 11 in Tamil Nadu, 5 to 7 gigawatts in Karnataka, and 5 to 7 gigawatts in, where is this? 5 to 7 gigawatts in Maharashtra. Ooh, okay. Gigawatts has been installed in Maharashtra. Hmm. Yes. Then under growth trajectory, we can read this. The Indian wind sector has experienced a resurgence with over 4 gigawatts of new wind power capacity installed in 2024-2025. Okay, 4 gigawatts. And the Global Wind Energy Council has projects a continued recovery, revising its onshore wind outlook for 2024-2028 to be 22.8 gigawatts. The onshore wind outlook, or I guess the onshore wind capacity for 2024-2028 installation is 22.8 gigawatts, which means massive, absolutely massive. Yes, massive. Um, okay, let's read even further. Very important. I missed this completely. Why is this so glitchy? Okay, hold on. Why is this actually so glitchy? This is awful. Okay, according to the National Electricity Plan, according to the National Electricity Plan, installed wind capacity is estimated to reach around 73 gigawatts by 2026 and 2027 and 122 gigawatts by 2031 and 2032. But the government wants to go for 140 gigawatts of wind capacity by 2030. So that is it. That is all for KP Energy. Double margin company. Okay, we got high profit margins, pretty nice profit margins, we will say that. Even the net profit margins are, I think, so double digit. We saw that double digit net profit margins, extremely high growth. Company is aiming for 60 to 70% growth year on year, and the government targets are massive. 73 gigawatts by 2026, 2027. Then another or cumulative 122 gigawatts of capacity by 2031, 2032. But the government wants 140 gigawatts of capacity by 2030, and offshore wind is a big, big area, a future area of growth. And offshore wind is something that is untapped, something that has not been explored. So that's it. That is KP Energy.